Now in the middle of one of the biggest recessions in modern day history due to unforeseen events rocking the financial and oil markets, opportunities have opened up for various greatly undervalued e-commerce growth stocks. At this point, even top valued e-commerce stocks have been significantly reduced in value. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like this. With some of the principles you have already learned in this channel, such as having an emergency fund for at least 6 months and backup funds to deploy at great value investments, you are now better equipped to handle situations like what we are in now. In this video, I'll discuss 3 top e-commerce stocks that you can invest in today which have been massively undervalued and present great opportunities for huge appreciation over a short period of time and into the foreseeable future. Get ready! You are now entering the Academy. In this pandemic, there are no real winners. The outbreak and subsequent shutdowns of various industries is likely to cause a prolonged recession, which harms the economy as a whole. However, there are some industries with favorable long-term prospects whose businesses may see accelerating adoption during this time and will likely emerge in a much more favorable position relative to other companies when this is all said and done. If such stocks in these industries are down significantly, these are the stocks investors should think of buying next. One of those sectors is e-commerce. Obviously, e-commerce had already been growing significantly, making up about 10 to 15% of all retail sales and gaining market share on traditional retail. As a result of the outbreak, that growth path could actually accelerate over 2020 and beyond, entrenching e-commerce further in people's buying habits. That should benefit the following 3 companies, all of which deserve to be on your watch list, especially if they are undervalued. The most prolific e-commerce company today is Amazon, ticker symbol AMZN, which has seen a huge surge of demand amid the coronavirus. In fact, the company announced in mid-April it was hiring another 100,000 full-time workers who had been laid off from other professions amid the outbreak. Researchers are also seeing spikes in internet traffic for Twitch, Amazon's esports streaming and video chat platform that it bought in 2014. In addition, Amazon is about to release their first series of video games next month, including a sci-fi adventure game called Crucible. That's in addition to the company's upcoming video game streaming platform, which is currently codenamed Project Tempo. Finally, there's Amazon Web Services, or AWS, which is the world's leading cloud service platform. Their cloud computing business hit $35 billion in revenue last year, growing at a clip of 36.5% with an additional operating margin of 26.3%. AWS was on track for record-breaking numbers before the outbreak, and the crisis may spur both large and small businesses to accelerate their adoption of cloud computing even more for less dependence on in-person business and more on a distributed workforce. A recipe that will create even more demand for Amazon's products and services. This is a recipe for great acceleration of growth and profits for Amazon stockholders. While Amazon stock has done well during the recent downturn and is still actually up on the year, Latin American e-commerce giant Mercado Libre, ticker symbol MELI, has seen its stock plunge nearly 40% from recent 52-week highs. You may ask, why is this so? I mean, Mercado Libre is the dominant e-commerce platform in all of Latin America, where e-commerce and electronic payments are still vastly underused. But it is the COVID-19 outbreak that should serve as a catalyst to accelerate those trends even more. In the fourth quarter of 2019 alone, unique buyers on the Mercado Libre platform grew an additional 30%, with an additional number of new users of 20%, and with sales growing an additional 30% as well. But this is just the tip of the iceberg for Mercado Libre, where its secondary business Mercado Pago, its electronic payments platform, could be the catalyst to spur growth tenfold. Last quarter, Mercado Pago grew total payment volume by 100% and total transactions by 130%. And not only is Mercado Pago being used internally in the Mercado Libre marketplace, but it has also seen usage explode outside of their marketplace, with off-marketplace transactions growing a stunning 180% during the last quarter. Some might ask why Mercado Libre is down so much, given surging e-commerce demand amid the outbreak. Obviously, the outbreak has caused a lot of fear of a deep global recession. Usually when that happens, emerging markets such as Latin America are viewed as riskier investments. Unlike Amazon, Mercado Libre still isn't profitable, as it has been investing heavily in free shipping and other technology and marketing efforts to capitalize on its long-term growth opportunity. While these are valid concerns, the 40% drop that the stock has recently seen seems like a very enticing entry point for long-term investors that want to invest in a solid e-commerce company with potential for 100% growth in the near-term future. Finally, China's JD.com, ticker symbol JD, has been the best performing e-commerce stock in 2020. In fact, even though the coronavirus originated in China, JD stock is up 13.2% on the year, though it's still down about 20% from its all-time highs set back in early 2018. A few things are going right for JD. First, Chinese stocks had already been hit during the 2018 and 2019 US-China trade war and had already been down more significantly than their US counterparts. However, JD reported a strong fourth quarter in 2019 that showed accelerating customer and growth trends across its e-commerce platform. Profit margins also expanded as JD's logistics arm continued to attract third parties to use its best-in-class logistics capabilities. JD is particularly compelling because it has invested heavily over the years to develop its own wholly owned end-to-end logistics platform with its own distribution centers and warehouses all over China. That has been a tremendously expensive endeavor and is why JD earns much lower margins than rival Alibaba, which is more of a pure asset-light platform. However, JD's strategy could have an advantage now as Chinese consumers flock to its speedy and reliable delivery system run by JD's own employees with verified high-quality goods less prone to counterfeits than other platforms. That's why even with much of the Chinese economy shut down from late January to early March, JD is still projecting double-digit growth this quarter. Some may be wary about investing in Chinese stocks after the recent Luckin Coffee accounting fraud debacle. This is always a valid concern and should be on your risk assessment. Nevertheless, JD has been in business for a long time and counts both Walmart and Alphabet as investors alongside you. So I happen to think that the risk of fraud is much less relative to newly public Chinese companies. By employing simple strategies emphasized in the videos of this channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk e-commerce income portfolio that will appreciate over time and continue to pay income continuously through capital gains and or dividend income. Through careful planning and diligent investment of capital, as well as reinvestment of profits, one can create an income stream that can provide substantial income, eventually covering everyday expenditures and beyond. In this video, I provided 3 e-commerce stocks that are greatly underappreciated as of April 2020 due to external events that in a short period of time should be completely eradicated. These e-commerce stocks can be added to any savvy investor's portfolio, providing great returns in a relatively short period of time due to their undervalued nature. If you'd like to pick up some of these stocks now, make sure to check out the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a growth stock portfolio using the methods mentioned previously. And if you join now, and upon your first deposit, you'll receive 2 free stocks valued up to $1,400. So make sure you take advantage of this promotion now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.